Hello, everyone, and welcome to another popular investor interview. My name is Henry Ward, and I am now sitting here with Reinhardt, who is one of our investors, popular investors, who's been trading on our platform for over 4 years. So, Reinhardt, you're one of the longer people who have been trading on our platform and popular investors. Introduce yourself to our audience and tell them who you are.
Yeah, thanks, Henry. Thanks for the opportunity. So, yeah, my name is Reinhardt's Coetzee. I've been on eToro since about 2016. So my background is in industrial engineering. So I work for a company. We also do a lot of digital transformation, bringing companies into the new digital space, and some qualifications, background in things like business intelligence, analytics, data management, things like that. So in terms of investing, yes, I've been doing it here on eToro since 2016, and in my private capacity before that, probably since about 2009.
So how was your day job being affected by coronavirus?
Yeah, look, I mean, it's been difficult. We've all been working from home for quite some time now. It's all about, we were talking about this earlier, so it's trying to fit everything in your day has become even more difficult because there's no more just a 5-minute quick little chat in the office. It's all about, it's either a Microsoft Teams meeting for half an hour or a Zoom meeting for an hour or something like that. So it's been a challenge, but I see a lot of upside as well in that. So I've always been a fan of remote working anyway. So it's been good for me.
Yeah, no, it's the same in my end. It's just absolutely manic at the moment. The markets are just crazy, and so if you're finding it hard to have time during the day for your normal day job, how do you find time for trading?
Well, to be honest, my day job is something that has always been allowed me to have a lot more free time. So I've been working remotely for quite some time, even before this. So I'm on a consulting kind of role. So it does allow me to have a lot of free time and set my evenings plugging away at eToro, doing my research and things like that. So yeah, I think the other positive I've had and the blessing I've had is to be able to be in that industry where I get to work with a lot of technology that I invest in. So it's almost like a benefit there in terms of doing it on a daily basis.
So is that how you actually got into trading, and is that how you found eToro? Did you see the correlation between your day job and potentially investing and go, oh, I can potentially do the two of them at the one time? Is that how you fell into trading?
Absolutely. So I've always been in love with technology, following technology stocks, the big ones, for a long time. I've been working for technology a long time. Recently, in the last couple of years, even more so in a consulting perspective, actually advising customers on certain technologies to use, and some of them falling in with what I invest in. But even before that, I've always had a bit of a passion in investing myself. So since 2009, I started investing really into like ETF managed kind of funds. And then a couple of years after that, I started to really look into like individual stocks and following those and investing those companies that I've personally seen that there's a lot of value and I see a lot of growth potential in the future.
So you're someone who invests in tech, and you're someone who works in that same sort of industry. Were you working on SpaceX rocket launch there that happened over the weekend?
Yeah, so I watched it. I watched it twice because the first one got scrubbed. So I was watching the other one on Sunday. It was awesome. I worked with my little girl. So yeah, I'm one of those geeks. I watched the whole thing for the whole 2-hour presentation beforehand, watching two of them sitting in the space shuttle for 2 hours, just wondering, man, what do they do if they have to go for a pee? They're sitting there for 2 hours in the space shuttle. But yeah, I've been a long time Elon Musk fan as well, being a fellow South African, even though I don't think he calls himself a South African, but I've been a long time Musk fan. I think he's brilliant. I think the world needs people like him, as eccentric as he is. But I think it's amazing what he's done.
Yeah, no, he's done well. All right, he's done well. And why did you become a popular investor?
Yeah, so like I said, I started in 2016 eToro. The goal was just really to find an online platform, a broker, which wasn't complex and difficult and with fees and things that were kind of hidden, things like that. So I came across eToro, started investing there, and the idea was just to use that as my main focus for building out my main portfolio, investing in US tech stocks, US stocks. By the end of 2016, I think I sort of saw I had a few followers, a few copiers, and only after that did I start looking really into the program, and I signed up and I saw, okay, it looks like something that could be really great, getting more interactive with the people that follow you, and yeah, it's been awesome since then.
Okay, so you've over 1,000 copiers who actually trust you. What would you say to new people who are on the chat and watching this on live? What would you say to those guys who are looking to invest money into someone but just don't know because they just don't know you or they just don't trust you?
Sure. So I mean, investing is very difficult. There's so many different options out there, right? So I think trust is one of those things that it gets earned. It's not just something you just get. I think a lot of people start following me, start copying me, especially more recently because they see there's a bit of a track record there. So I think that gives them a little bit of peace of mind. But in terms of going forward, if you're sitting out there now and you're thinking about copying, pulling that trigger, I think, you look at the track record, you see there's a bit of a track record, but you're also going forward. I think building that trust is it's an ongoing thing. It's about communication. It's about following through about things that I say, putting the posts and things on the feed and recommendations that I do in my own personal strategy and following through with it. I think people see that, and that's really how you start building that trust. And I think for people that have been copying me for a while now, that I think that's something that has really come through quite strong.
So you think that one of the biggest things to build trust with people is actually to post stuff on the feed, interact with them, answer their questions, even though you may have answered the same question 100 times already. Is that what you mean?
Yeah, absolutely. So, I mean, I've made a point of it to absolutely try and get to every single question as soon as I can. And I mean, on eToro, you often find you do get the same question often. So people will often ask some things like, when is it a good time to start copying or things like that. So I always try and give my full elaborate answer, which is, not just the one-liner. I think everybody starting off starting from that same perspective. They really need that insight to really understand. So that's the one thing. And the other thing is, just that ongoing communication. I think if we look back at what we saw happen in March when we had that huge sell-off with this demand shock that happened, I think obviously a lot of people got very worried very quickly. And I think, again, building that trust throughout that period by just guiding people and ongoing communication to say, listen, this is my view of what's going on and what I'm doing at that time.
Yeah, so you said at March there, everyone got a little bit worried of what happened in March. So you're someone who has been trading for the last 4 years. What was your words of wisdom to people in around March when the markets has dropped, their portfolio could be down 60% of themselves? Now, not necessarily copiers, but just people who are asking you questions, because I assume you get a lot of people who are not copying you, but they are asking for help because you have been trading for 4 years. What did you say to people at that time?
So this has been one of if I can use one of those brilliant quotes I've seen from some of the people I follow, like they'll say 99% of long-term investing is doing nothing. And then the other 1% is what will change your life. And it's really true. It's like long-term investing is really all about investing, keeping to your strategy, don't change things. So even what we saw during March, the real thing was just keep to that strategy for me. And you see this, this daily bad news just coming out, and it took a lot of people by surprise. And obviously the markets got scared. But if you look beyond that and you really just focus on the businesses that I invest in, so this is trying to get to answer your point. So what I say to people is, just focus on what you're investing in. Understand those companies, what the value proposition is they're going forward. If the market is selling off by 40%, yes, those companies will sell off too, because it's just the nature of the game. But look out 5 years from now, is the investment case still strong for those companies? Those companies didn't change overnight. They still have the same value proposition. Just keep that long-term cool mind throughout that period. That's the advice I give everybody.
Well, we know in trading that's a little bit harder to sit in your hands and do nothing when you can see your portfolio is down. But as we talked offline, I'm a technical trader. So to me, when I saw the sell-off of 40 to 60% on some of these stocks, I was like, lovely. This is time for me now to cash in. This is time for me to actually start buying stuff up. This is time for me now to set my retirement up. Was that something that you also were thinking, or were you just slow and steady and didn't enter into the market and kept out of it? Or
no, absolutely. So that's probably one of the single biggest difficult things to explain to people, and it's always one of those difficult situations when you see that the market's going down, crashing. I mean, we saw one of the fastest crashes in the history, right? I think it's the second fastest one we've ever seen. To tell people at that moment in time when the portfolio is down 40% to put more money back into it and actually buy stocks, I think that's an incredibly difficult sell. But it is really true. I mean, if you go back and you study the history, you go back in the markets, you go back and look at 2008, go and look at 2001, 2002. The best time in the market history to actually buy stocks is immediately after or during those crashes. I mean, nobody can ever time it perfectly. You're never going to buy at the bottom. But I think the key is, and this is what I've always tried to put the advice out there, is have a strategy where you consistently buy back in, especially when you see the market selling off. Have a strategy. So, if you're sitting, even now, we're sitting some money on the sideline, have a strategy. You say, look, I've got so much to spend. Let's break that up in three. Let's put a little bit in now. Let's put another investment in 3 months from now, 6 months from now, and that way you kind of average it back in over time.
So you're talking a little bit of dollar cost averaging, but that actually brings us lovely into what is your strategy and where do you do your research?
Yeah, so I mean, I've replicated my eToro portfolio and a couple of online services out there. I mean, there's a lot of research, a lot of places you can research online. So there's a couple of places where I replicate my portfolio, like NASDAQ has got a pretty cool one, Financial Times has got a pretty cool one. So you put your portfolio in there and it spits out all the news for each and every stock in there. It kind of gives you an aggregation of all the news. So that's the one way. And then I also subscribe to a couple of premium services, like Motley Fool and services like that. But at the end of the day, it really comes down to that core belief in terms of over time, how I almost call it like a relationship I've built up with these companies over time, because I've been investing in some of these companies for, since 2011, 2012, and eToro, you'll see some of the trades I've got there. I've bought and held since 2016 when I started. So there's like a relationship there you built with that company. And yeah, so on top of that, obviously the most important thing is just to keep on studying those quarterly reviews, quarterly earnings when it comes out, especially now during times like this. A lot of people are worried like the recovery has been too quick, almost too good. So when you look at the general market, it's still about down 10%, but the NASDAQ tech stocks have climbed up. But if you look at some of those stocks, some of those really good businesses in the portfolio, they've actually still come out with really good earnings, and even better, they've actually given really good guidance. So like a lot of companies are actually scrubbing guidance, like they'll just quote and say, there's too many variables, too difficult to predict what's going on with the current market. But some of these companies, they've actually seen, big increased demand at the moment, and they can actually raise their guidance and say, listen, we're pretty confident we're going to be in a strong position in the next quarter. And that's the kind of thing I'm looking for in companies I follow.
And would you say you've changed your strategy through these volatile moments in the market?
Fundamentally, not at all. So like I said before, I firmly believe you should have a strategy throughout a period like this. I think the only changes come in, like you mentioned before, when you saw that March sell-off, I thought, okay, now's a great time to actually put some more money in. So I wouldn't necessarily put that much money in before, more slow and steady, like you alluded to earlier. But when I saw that sell-off, I think I saw there was a good opportunity now to put some more money back into the portfolio. So on my feed, again, talking about that communication, I posted a couple of feed posts in there to show everybody when I put money in. And I think I put in March and then again later in March. So never timing it perfectly, but the idea, again, just putting more money in and buying stocks when they're on sale. The other thing is also there's an emotional side to this as well, investing. So again, another quote out there is like 90% of what you do in investing is you've got to be almost like in the right mindset. So for that, the only thing I have changed a little bit is put in a little bit of cash in portfolio. So I think I've got about 9% cash available. So it means that if we do see another bit of a dip, there's cash available that firstly buffers that blow a little bit, and secondly allows me again to buy in back quickly. Typically, I like to be full throttle, foot on the gas, and be 100% invested. But during this time, there is a little bit of volatility. There's a bit of uncertainty. So I like keeping a little bit more cash in the portfolio than usual.
Okay, so is there any stocks that you have your eye on at the moment?
Yeah, so that's the biggest thing for me, is keeping my eye on those stocks that's just showing a lot of potential. So obviously right now, I think there's like this new trend that's out there. It's like the digital economy. So with businesses moving more and more online, you've got the big guys out there like Microsoft and Amazon that's obviously going to get rewarded from their big cloud infrastructure. Amazon even more so, because obviously people are actually spending and buying online, but Amazon Web Services is a big growth driver for them. Microsoft is the Azure business. Then the guys like Shopify, enabling that e-commerce shift for people to have that digital front-end, digital presence. Shopify has seen huge return in the last month or so. I've been a huge follower of Shopify.
I missed my entry on the pullback there, back to a nice horizontal level, and I just missed my entry. So I was very
Yeah. So just on Shopify, I mean, that actually brings me to a good point. So a lot of people, since 2016 that I've held some of those trades on Shopify, I think before this shift now we saw this huge spike in Shopify, those trades were already up by 200%. So people would often ask, like, why are you not closing those trades? Why are you not cashing and taking the profits from those trades? So it just comes back down again to, do you still believe in that company? Do you still see the growth trajectory ahead of where we are, even at its current levels? And I would say yes. So even where we are right now with Shopify, I would still say, Shopify is one of those companies that are absolutely cornering the market, and I don't see that demand going anywhere, even after we get to, a new kind of normal, whatever you want to call it. With a stock like Shopify that's grown so much, you're bound to see some pullback, and you can see some sharp pullback. But my thing is always look at where that company is going to be in 5 years from now and make your investment decision based on that.
Okay, so any messages but not advice for any of the people watching interested in copying you?
My best advice would really just be have that long-term outside. I know I hammer this the whole time, but it's probably one of the biggest questions I get on the feed right now is, is this a good time to start copying? And it's really difficult to say, right? I don't think anybody can really give you the right answer with that. And you can read different views. So people will say, we're dangerous levels. We're going to see a huge pullback, and that might be true. But I would also just remind you that if you go back to even 2016 when I started, people were already telling me, asking me back then, are you not scared of a crash? We were then about 6-7 years into the bull run then. So when we saw this crash in March, I had a lot of those same people coming to me and saying, you're probably not so happy you invested in equity markets right now. And my rebuttal to that was, even at that low point we saw in March, I think it was around about March 22nd when we saw the low point in the market, it was still up about the tech stocks, the NASDAQ 100, the benchmark I follow, was still up about 50% from that 2016 entry point. So this goes to show, even with that huge drop-off we saw in March, it was better to be invested than not invested. So that's kind of my so, not advice, but my feelings on investing in market.
But the thing is that you're using the NASDAQ there, but the NASDAQ has been going up since the day it opened. So it's that then to me makes investing very, very easy. Why? Because if over a period of time it consistently goes up, but when you have those dips, then that's where probably the best time to invest. But then also, like you said, it's hard to let people to get that into the psychology. Well, it's dropping. Why should you invest? So 100%. But on to this question, what do you think of selling your stocks by August taking the profit and then reinvesting in the winter when COVID-19 crisis hits again. Because as we hear that we expect coronavirus to actually start up again once cold and flu season comes back in again.
Okay, yeah, so I mean, it's a valid question. My answer to that is just always, you're playing a very risky game. You're playing that timing in the market game, which has been proven to be very difficult. So I'm not a technical analysis trader, so I don't spend a lot of time looking at stock charts, technical analysis charts, more of a fundamental research. So my warning about that is just, it's very difficult to re-enter the market once you've left. So if you cashed out that entire portfolio and if you see the market drop, it's very difficult to get back in. And often what happens is people wait too long to get back in. They see a bit of a recovery and they think, okay, well, this is not yet the recovery. They wait a little bit longer. And before you know it, you've seen a 20% recovery in the market. And that's when they get back in. And what you often see what happens is it's exactly the opposite of what people should be doing. They're basically buying in high and selling low. So, I mean, it's just too difficult to predict when that market will bottom out and what we will see, what will happen if there's a second wave of infections, which is a legitimate concern. There's a lot of other concerns going around with US-China tensions and everything. But, I mean, to give you another example, during that March dip, I had the same kind of question. So when we were about halfway through that 40% sell-off, people would be saying already, why are you taking your cash out of the portfolio and wait for this thing to blow over and put it back in? So exactly the problem there, you probably would have missed this V-shaped, U-shaped recovery we've seen already. And that's just the tricky thing with investing. That's why long-term is just staying invested for me is the best advice.
And what is the maximum drawback you'll allow to happen before you would close a particular stock down?
So it's a difficult question. I'm not a big fan of putting in stop losses. It's just also one of those things. You could have a stock like drop down about 40%, and then you've got your stop loss, and within a second you're out. And again, it's very difficult to buy back in. And then you inevitably miss out on that recovery. So for me, once I've committed to make that investment thesis and the company looks attractive to invest in, I typically stick with it. So in terms of drawdown, I can't really give you, there's no specific number of, I always look at examples. If you look at, and it's easy to say this in retrospect, of course, but if you look at a stock chart of Amazon, if you look at what happened to Amazon 2002, it lost about 80% of its value. Of course, now, if you had held on, even with that 80% drop, you would be smiling right now. But of course, it's very difficult. If you see a share lose that much value in a short space of time, it's very difficult to hold on. But I just get back to that. If you still believe in the investment case of the business, I still hold on. If you don't, and you think something has changed fundamentally to that business, then you can sell.
Isn't that where dollar cost average comes into the market, that you're slowly buying up as it's going down? So and as it starts going back up, you only have to get to halfway to break even. And then when you continue that, then it goes to the upside, then you're in massive profit on the upside. That's probably the easiest. Now, one of the questions here for our audience is, what methods do you use to find fair value of stocks? And do you use different methods for different stocks?
Yeah, like so I said previously, I've got a couple of stock screeners that I've got set up out there that kind of builds a consensus view of what that intrinsic value of that stock should be. Of course, with tech stocks, it's often difficult. If you look at a company, talked about Shopify, the valuation at the moment is exceptionally high. So it's difficult with some of these tech stocks to find that intrinsic value. But yeah, I kind of build a consensus based on that portfolio out there and get the aggregation. But at the end of the day, then the final decision really comes up to, everything I've experienced, my personal feelings, my beliefs in the company.
Okay, so Reinhardt, congratulations on your successful investments. My question is, considering you have an investment strategy of 5 to 10 year strategy, if someone wants to copy you now and the price was to bounce back up, is it still a good entry to buy?
So I think it's that same kind of question as to, is now a good time to start copying, if I understood the question correctly. So like I said, it is incredibly difficult to judge. A lot of people, my friends and family, also will ask me, is now a good time to invest? There's a lot of uncertainty. We could see another 20, 30% pullback in the market if we do see that second wave coming. My best advice again there is do that dollar cost averaging. Take whatever you've got at the moment, and if you are concerned, if you don't want to go pedal to the metal right now, is split that up into 3 or 4 and invest that over time into, like, split it over into the next 3 months. So buy in every quarter, basically. That way, even if you do see a big drop in a month or two.
Would you say that people then should then follow your open trades, or should they just wait for new trades to be opened up?
Okay, sorry. So if that was the question, that was a bit of a long-winded answer. Absolutely, yes. So always copy open trades. I mean, it's not the same for everybody on eToro, different strategies, different traders, especially when talking about different things like Forex trading and day trading. For me, it's investing into like a portfolio of companies. And if you don't copy open trades, I do very few trades. Sometimes I'll go a month without opening a trade. So if you do copy without opening trades, you might see a very long time before those funds actually get invested. The other thing is it won't follow the same kind of performance, right? So to give you an example, if I say this month I opened a trade in Tesla, you'll only be carrying that one Tesla position. It will be a very small percentage of your funds that you copied with, but it will only follow that Tesla position, and the rest will all be in cash, versus mine will be 90% invested in a portfolio of stocks. Sorry, Henry, long-winded answer again, but yes, I definitely copy open trades.
I'm pretty sure I know the answer to this one, but any thoughts on cryptos?
Yeah, look, I've had it from time to time in my portfolio. I've had. Sorry, Henry, I lost you there.
You can say no if you want.
No, look, I believe in the tech. I think the tech is, blockchain is something that can definitely revolutionize a lot of things. The difficult thing is evaluating that value in some of those, especially the altcoins. I think Bitcoin has some intrinsic value as a payment mechanism going forward, but at this stage it's still very difficult to judge what that value is. I do see a lot of potential for Bitcoin. I've had it for once or twice, but at the moment I'm more focusing just on stock trades, businesses, companies, technology.
Okay, and what are your thoughts on oil?
I mean, it's scary. I don't know what's going to happen next. I mean, it's you kind of saw the same thing happen in 2008. The price of oil dropped substantially. That's another thing we see happening now. A lot of people are worried about this pretty quick recovery. We saw the same kind of events happening in 2008. It took longer, and this time it's much more rapid. But yeah, in terms of oil, I mean, if you're asking me if it's a good investment, I would say no, but that's my personal feeling. A lot of people have also asked me, is it now the right time to invest in like energy companies in that oil sector or airline industry? And my feeling is no, because if you look out long term, for me, that's just not the way where we're going. That oil industry, that airline industry has been a very difficult industry to follow. So I wouldn't invest in oil or some of those stocks, or travel, for example, that has seen a lot of pain at the moment, because you just don't know how long that's going to take to recover.
Well, I'm invested in oil, so I'm some of the stocks. So I'm looking for loads of upside. So let's see how that comes. But look, much, Reinhardt. It's been an absolute pleasure. Thank you very much for chatting to us today. Now, guys, I run a trading course where I teach people how to trade technical analysis. I do webinars every Tuesday between 1 and 2. And anyone who wants to jump in on that, just type in eToro Trading School into your web search and then click on that and then go there. We also have a podcast that we send out every Monday, and we generally go through 3 topics on them. And the 3 topics that we go on the webcast, I will be going through on the webinar. And then I take questions of people, find out what they need to know. But also, if you are on the homepage there's a little click for the next webinar. If you click on that webinar, it'll bring you to my trading school, and it will bring up anything that you need to see there. There's loads of stuff on the website, whether it's basics for trading, whether it's looking at the top picks we have for 2020 or the quarterly picks, so on and so forth. Or we have in documents there on the likes of the pharma companies, what we expect with those, what they have done already, so on and so forth. So look, everyone, it's been an absolute pleasure. Thank you, Reinhardt. It's been a really, really good interview, and I hope you have a lovely day. Bye-bye.
Thanks, everyone.